Hi, guys. Welcome to another episode of Finance for Founders. Lovely to have you here. This is a show where we break down what it really takes to build, scale, and exit a successful business without getting lost in all the financial jargon. Today's guest is a true heavyweight in the world of SME acquisition. He goes by the name of Guy Bartlett. He's the founder of the Business Buyers Club and an M&A strategist, a serial entrepreneur, and someone who's helped close, I'm sure more now, but over 146 million pounds worth of deals. From building multiple seven-figure businesses from scratch to creating a thriving portfolio through acquisition, Guy's journey is packed with real-world lessons founders need to hear. Whether you're thinking about exiting your business, buying your first business, or just want to know how real deals get done, this conversation will shift how you think about growth strategies. So we are going to dive right into it. Guy, welcome to our podcast. How are you?
Thanks, Samuel. I'm good, thank you. Very well.
Fantastic. Before we start, we have a tendency just for our audience to get to know you a little bit, is to ask you a few quick fire questions, right? It could be personal, but quick fire questions, right? So that the audience gets to know a little bit about you. Do you prefer to buy or build?
Buy
Biggest deal breaker in business?
people,
Most underrated skill in M&A?
understanding people,
First thing you look at in a deal?
the people.
Worst business advice you've ever received?
That's not possible.
I agree with that, actually. One founder habit that drives you mad?
Founder habit. Not being aware of your numbers.
Best investment you've ever made?
Myself.
I agree. Your go-to book or podcast for business wisdom?
Gosh, there's lots of them. I like some aspects of Diary of a CEO. I think that's still some really good content on there. I also like currently a lot of stuff on YouTube from Dan Martell.
Okay, yeah.
Talks a lot about how you buy your time back, and that's an important theme for any business owner or entrepreneur as well. Back in the day, a really favourite book of mine was Billionaire in Training by a chap called Brad Sugars. It's not readily available, but it is available online, and it's a great book. So again, it helps you think about the levels of business that you might want to be working in, really. So those are just some off the top of my head, and probably the eponymous Rich Dad, Poor Dad, but the cash flow quadrant, because I read that book at the start of my M&A journey and thought, damn, I'm in the wrong quadrant. So it was kind of the beginning of the process, really.
Fantastic. And we're going to get into a little bit more about that as well. Are you an early morning person or late night?
I used to be late night. I'm early morning now.
Fantastic. And one thing every founder should do before they exit.
One thing a founder should do before they exit, celebrate their achievements.
Once again, Guy, welcome to our podcast.
Thank you. Thanks,
Our
Samuel.
audience have got to learn a little bit about yourself. So before we proceed, tell us a little bit about yourself and what you do for our audience to hear.
Well, it's been a long journey from the start point, really. These days, as you said in the intro, I've got a portfolio of my own companies, including one business which helps coach people and explain how to buy and sell companies. So I think that's an important part of what I do. As a coach, I've always been a sharer of what I actually do. So I don't coach for the sake of coaching. I coach to share the experience and the knowledge that I've gained over the course of time, really. So that's probably the key distinction. But day to day, I'm here in one of my businesses today. We just had a management meeting. Yesterday, I was in Glasgow for the dying embers of my military career. I'm still a staff officer in the Army Reserve.
Wow.
So I was doing some work up there in my military job. And tomorrow I'll be working on some deal flow. So I've got a deal that I'm helping a client to complete this week. So it's quite a mixed bag of things that keeps me pretty busy, to be fair.
Fantastic. Thanks for that, Guy. What kind of role do you occupy in the businesses that you acquire? Are you quite hands-on? Do you like to be very involved?
So it's a great question, and one that has varied over the course of time. So I've personally acquired 13 companies so far. I'm planning to acquire some more. The roles and responsibilities have varied from deal to deal, really. So in the early days, the first two businesses that I bought, I was quite hands-on in working on transforming those businesses from the founder companies, if you like, that they were, into our goal was to do a roll up of a number of businesses. My first deal was in January 2006. Between January '06 and 2012, ended up buying five different companies,
Wow.
all in the FM space, and each time looking to roll them into a slightly bigger organization with mixed results. Didn't always work out that way, but was a brilliant learning ground, really. So specifically to answer your question, it sort of depends on the size and the state of the business. One thing I've learned over the course of time and observed is I think now if you acquire a business that's probably between, I'm going to say, 500,000 to 3 million revenue, you probably should expect to work in that business fairly comprehensively, because you will pretty much be replacing the founder. And most founders, despite what they say, are pretty hands-on in their businesses. So there's a leadership function, there's a direction function at that level of business, where the people that you inherit through that transaction are going to be looking to you for decisions, for guidance, quite commonly on a fairly day-to-day basis, really. So if you're not in the business, then there's a vacuum becomes created, and that's when things can start to go wrong. My sense is that a business turning over more than 3 million, and obviously there'll be variables depending on what they do, but if you're acquiring a business in excess of 3 million revenue, you're probably getting to the point where there is more of a day-to-day management team, and those guys will be used to turning up, putting the lights on, and doing the thing.
Yeah.
So then you can elevate yourself to a more strategic role, where you're going to be looking at strategy, at business development, at the plan that you had when you looked at acquiring it effectively. So I think that's kind of currently the benchmark, somewhere between 3 and 4 million, less hands-on, between 3 to 4 million hands-on, above 3 to 4 million, depending on the type of business, more strategic. And that really is the essential difference. Now, again, people often ask me, what should I be doing? The question is what you do now and what your goal is with an acquisition. Do you want to replace the job that you have? Do you want to buy a job? Do you want to buy a bolt-on business for an existing company? If the goal is simply to make money, then you need to think very, very carefully about what that looks like, and probably expect to be in the business for that to be the outcome. But if your goal is more strategic, let's say you're running business A and business A is working okay, maybe has some challenges. Most businesses are not a perfect machine, so there's still areas where there's some improvement. But let's say, for example, when I started, I'd grown a business fairly successfully, and the curve was like that to begin with, and then it sort of tailed off. And I'm sure you see this in your practice.
Yeah.
So the challenge for me was, how do we break through? How do we then regain the growth rate that we had, without inventing more than 24 hours in a day? We couldn't work any more hours. The solution became, for me, the obvious solution was, well, if we could acquire parts of our supply chain, so we were, buying materials and services from various companies. If we bought some of that, A, we would keep the profit in the group, and B, we would open up channels to new customers where we could cross-sell and cross-fertilize. So my start point for acquisitions was purely solving a business problem. It was a means to an end. If we bought these companies, we would solve a number of problems in principle in one go, essentially. So that was my reason for getting into it. It wasn't particularly financially motivated. Finance, the money would have flowed as we grew. It was my ambition to grow the business effectively. And if you think about organic growth, most businesses would be happy with maybe 5 to 10% compound annual growth rate. You buy a business that's the same or bigger than your existing business, you've doubled your turnover overnight, and you can't do that organically. So there are lots of compelling reasons why it makes sense strategically to look at acquisitions. Obviously, there are a lot of challenges that come with it, that integration piece, the transition, etc. But the strategic reasons for doing acquisitions are completely without question. It's just a question then of how you go about it.
Fantastic. In what you've said, there's so much that I want to come back on, right? So I think my first question is, what was the business that your first business, right? And has that played a part to the kind of businesses that you acquire, meaning that so that you have some prior knowledge of it. So what was the first business and how has that played out to the businesses that you acquire?
It's probably worth explaining how I got where I am, I suppose. Nothing was particularly well planned. I joined the regular army when I was 18 years old because I hated studying in school. And the prospect of going to university for 3 years filled me with gloom. And I didn't expect to pass any of my school exams as well. So I joined the army in the summer of 1983. And then in August, I got my results, much to my astonishment, ended up with 4 A levels,
Wow.
um, which also meant that the army decided that I had prospects to be an officer. So that sort of changed everything very quickly. And so I had the opportunity a year later to bridge the academic gap, go back, start a course as a university student. So I had some time to fill. So I transferred to the reserves, or what was then called the Territorial Army. So I kept training in green at weekends and every opportunity that I could. But then I found myself with a job, much to my surprise, as a sales trainee, a sales rep training in a printing company. I knew nothing about printing, but I found it absolutely fascinating, really, really enjoyable. It was a big firm. They were really good to me. They trained me. I got exposed to what sales was at different levels. And I kept deferring going back to university because I was just enjoying myself, really. I ended up going to Manchester Met University, as it is today, and doing a sort of, not quite a postgraduate, but doing a specialist course in marketing that used to exist in those days. So it was like a sort of night school type part-time degree. And what had happened was I'd progressed from printing to design agencies. From design, this was the 90s. I was fascinated by the heyday of British advertising, and there were giants like Saatchi and so on, taking centre stage. And I loved advertising. I was absolutely obsessed with it. Blagged my way into a series of account management jobs, different agencies, worked on TV advertising, and ended up producing the first on-pack promotion for Fox's biscuits, which
Wow.
meant that which meant I got tons and tons of wrappers with people's names and addresses on. I had no idea what to do with them. Found a guy in the agency who knew something about databases, about which I knew nothing as well, and that led me into the world of direct marketing. So I then embarked on a learning curve with direct marketing. Ended up running some of the biggest direct mail campaigns in the UK for clients like Sky, and sort of just meandered my way through opportunity as it came along. But I've always had, my father said to me a great line, always have an inquiring mind. So I've always had the kind of mind that says, how does that work? And what does that mean? And I'm one of those people who'll put his hand up and ask questions because I want to know more. I've always loved learning. I still love learning to today. And I think you have to have, as an entrepreneur, you've got to have curiosity about everything around you. How does that work? Why do people do that? What's the next technology, and so on? So that's always kind of been a flavor. And eventually I got headhunted in the mid 90s by a chap who'd run a big agency group, had left the firm in Manchester, and then said, one day my son will also be yours, come and join me. He'd seen me, in the industry. I had a fairly high profile, used to teach at Manchester Met University and so on. So I thought, why not? I'll give it a go. And one of my bosses had said to me, one day you should think about setting up your own thing. So that was like a little worm in my head about, oh, okay. I had no background in that. My parents were classic employees all their lives. I didn't really know any entrepreneurs. I think there were two boys at my school whose dads had their own companies, but that was about the extent of my knowledge, really. But I guess it had stuck in my head. And I'd loved watching stories around some of the giants of British industry. Jimmy Goldsmith, for example, the Barclay brothers. A lot of names that you'd read in the paper and go, oh, that's amazing, but never thought I would have any connection with that whatsoever. So anyway, I got stuck into the business. I think the year I joined he'd done 32,000 in sales. And by the time I left, we were doing nearly 2 million in revenue, brought in about 6 million in 6 years. So that curve that I talked about was quite rapid. Notable clients were JD Sports. I created their national loyalty program, the JD Gold Card, which was completely technology integrated. We built and hosted and managed 2.5 million consumer records for a bunch of clients. Fred Olsen Cruise Lines, IDOS Interactive, Man City Football Club, Sainsbury's Wine, created the home shopping platform for ice and frozen foods. Really kind of high level blue chip client base really by the time that I left that business. And the only reason I left is something that I teach now is I didn't have a proper shareholder agreement with this chap who effectively exploited me for 6 years and then wanted to sell the company to somebody else off the back of all the hard work that I'd put in. So you can imagine my reaction to that, which is why I left. But immediately I got bombarded with people saying, "Oh, now you're on your own. Come and help me with this or do that." So the next step was a project to work on creating a chain of urban spas starting in Manchester. And we worked to raise money with VCs. But the itch was there to go and buy some companies as well. So I hadn't scratched that itch. So I ran a simultaneous exercise whereby we built the business plan. We ended up getting offered 3.2 million quid from VCs to launch this plan for urban spas. But almost simultaneously, I had two companies saying, "Yeah, we'll sell to you." And to be honest, Samuel, I was just kind of making it up on the hoof. I spent most of 2005 just talking to companies saying, "Fancy selling to us?" Because I couldn't get this idea out of my head about buy a business rather than start one. Having done all that organic growth, knowing how hard it was enjoyable, it was exciting, but it was hard. And I thought, why not just buy a ready-made business, really? And so we got to this decision point with the VCs and the purchasers. And my partner then said, "Look, the core idea was yours. You follow that track with the VCs, and I'll go and do these, and then we'll kind of come back into together again when we figured out what happened." So that's really how it happened. And I just did the first deal in, like I said, January 06, which was really more of it was kind of more of a joint venture. It was a 50-50 deal, which ultimately didn't work out for reasons I'll explain. And then 6 months later, I bought another business. So we went from nothing to 2.7 million revenue in 6 months. And this is where ego then kicked in, because I thought, hey, look at me. I've cracked this. This is easy. This beats working for a living. Worked really hard at trying to integrate those businesses because we decided to go down the road of facilities management. So we started with two electrical service businesses, one in industrial, one in construction. And the idea was to create this holistic electrical services business. Culture, people, bringing those things together all at one go without really understanding some of the fundamentals of, I suppose, essentially how to run a different kind of business to what I'd experienced. I just made some really kind of core fundamental mistakes. So we closed the first one that we'd bought a couple of years later. The guy that we'd formed the joint venture with basically decided he didn't need me anymore. It was actually all his clients, and rather than get into conflict, we just decided to part company. So that was that. And then the second company that we bought, it took a while, but it became obvious that the business still needed him in terms of sales, and I wasn't interested in taking on the sales function, having acquired the business. So we sold it back to him, which again was a fairly elegant exit from what might otherwise have been, a difficult situation. So then I bought another business that had a different type of contract base, which was a government contract. So I thought, right, this will be more straightforward. It's just got a regular flow of work. Always look at a business in terms of where's the future revenue coming from? How stable is that? Am I going to have to go and find new business, or is the sausage machine, generating fresh sausages by itself? And here's another lesson: never buy a business that relies on government contracts, because government will change the rules or delete a contract or do any number of things at a drop of a hat. And so, that's a risk factor that I never saw coming. So we just basically closed the company because 80% of the revenue was this government contract, which when it was there was great, but when it wasn't very good at all.
Yeah.
So that was my first three. And then I thought, right, I'm going to take the learning and I'm going to create an M&E business to expand. So lots of customers were wanting to procure both mechanical services, so that's the plumbing side, and also the electrical. So it's in one package because sometimes those two trades sort of compete with each other. So we found a business that was well established on the plumbing installation side. And then we found a business, curiously, that had been recommended to us by another company that we tried to buy but didn't come off. And they contacted us out of the blue and said, "We know you're interested. We'd like to have a chat." What had happened under the surface was that the two founders had basically run their course and fallen out. In fact, one had moved to Spain and gone, "Don't want to do this anymore." So that was an interesting deal because they had got to a point where they had £50,000 worth of contracts ready to be signed, but they didn't have the appetite to run the contracts. So that was an unusual situation. So we said, okay, we obviously ran some numbers, modeled it, and said, okay, I know how to fund that. I know how to run that. So the deal was really interesting. It was the fastest deal I ever did, from discussions around, I'm going to say it was about the 15th of December, so just before Christmas, to the 1st of January. We planned it and executed the deal. And it was basically the sellers paid off their overdraft with the bank. It wasn't a huge amount of money, but they closed that down. I brought in a funder very quickly to support the contracts. We signed the contracts at the beginning of January. So then we knew we had a good baseline of work to work through over the next 6 to 8 months. And then obviously told the team, did all the transition. Here's where another interesting lesson came in. So the business had been struggling because of the sort of conflict that was going on. Suppliers were keeping a very close eye on the business. So we had to have early conversations with the supply chain. And if you know the electrical industry, there's only about 4 or 5 suppliers, period. So everybody knows everybody else. So we said to them, here's what we plan to do. Here's our business plan. This is how we're going to secure it. Is that okay? And they all said, that's great. The day that we signed the contract, we then got a series of emails saying, we're changing all your terms and conditions and reducing down your credit limit and pay terms. So I'd done the deal in a month. I then had to rebank the entire deal in a month in order to continue to trade. And the general manager left as well. So that was just chaos. By contrast, the plumbing company was pretty steady away, thank God. But we never quite managed to bring the two businesses, and geographically they were too far apart as well. So again, we ended up closing the business, and everybody thanked me for all the work I'd put in. Not that I made a huge amount of money out of it, but they all went, "You did a brilliant job. Thank you," for as long as it lasted. And we sold the plumbing business to an investment business. So it was a tale of two sides, really, and that took me up to 2012. And at that point, we'd won some contracts, core contracts with Carillion and a couple of other big FM companies. So I kind of reverted to what I know really well, which is just growing business organically. And we created 2 multi-7-figure businesses in that period. So between 2010 to 2015, we just grew 2 companies, both doing about 3.5 million revenue in that time, but more in the sort of FM and construction space, really. So that's kind of the tale that took me up to the start of the club.
Fantastic. One of the things I was going to ask you is your journey right now shows that you are very competent. Almost at every level you've been at, whether you stumbled at it or not, you seem to have had an impact that even when you've left, other people are calling you, requiring your service, and so on and so forth. So I can see how when you get into a business, you have the confidence to apply the things that you know, right? So my question now to you is, you train people, right? Is there a prerequisite for people that you train to be able to take over a business and successfully scale it? Right? Because I'm thinking if somebody decided they're gonna buy over a £4 million company and realize that they don't actually have any experience of running a business, what advice would you give that person? Because from your perspective, I can see how you've pretty much been a success. And the other question is a 2-part question is,
Yep.
what is your skill set that you bring to the table? So for example, you said quite a few things. It seemed like you've got a skill set in marketing. You've got a skill set in sales. Other people may say they've got a skill set in turning an old business and make it very digitalized, automate everything, which makes it very efficient and smooth. So that could be somebody else's skill set. So what do you bring to the table? What is your skill set? And how would you now, encourage or teach or train somebody that doesn't have the experience you have to actually buy over a company and successfully scale it? I hope I didn't say too much, but it's a two-part
No, no,
question.
great questions. I think so. Obviously, through the the career, if like the employed career that I had, I benefited from working in firstly sales and then marketing. So understanding how businesses can generate warm leads, build a brand, all that sort of stuff. So that was really helpful for me. And obviously, sales, what is a sales process, if you like? So you're right. I very much used that experience in the first few deals that I did to look at the owner managed businesses from a marketing and sales perspective. And if you think about most founder companies, most of the time they start because it's a skill set or a knowledge piece that people have. Again, take the example of the plumbing and electrical businesses that we bought. They were all founded by electricians and plumbers. So they had a skill set that they decided to turn into a business. They'd worked, they'd trained, they'd worked for somebody else. They reached a point where they said, okay, I'm going to do this for myself. And most founder companies are exactly that. Either people come straight out of university and start it for themselves, that's fine, or they have some experience, decide that they no longer want to be an employee and give it a go. What they tend not to have is the surrounding skill set. So they'll be weak at finance, which is why they come to you, and they'll probably be weak at marketing and sales, but they'll have enough knowledge on how to deliver the product or service and probably enough contacts of people who go, yeah, if you set up, I'll buy from you. And that's how businesses start, essentially. I think what's happened to me over the course of time is that I go back to my point about an inquiring mind. I always wanted to learn more about all the different aspects of business. So I can read a set of accounts from almost like telling me the story of the business. I can
Yeah.
look at 3 years accounts, look at the balance sheet, look at the P&L, look at the changes that have happened, and it gives me a story of probably what's gone on in that business. But that wasn't something that I went to school for. I asked lots and lots of questions of my accountants to understand things. Most people, I don't know if you'd agree, Samuel, but most people have a conversation with you once a year to say, what's my corporation tax bill and what's my personal tax bill?
Yeah.
And they'll never ask you any questions about the balance sheet. They'll go, I leave that to my accountant. And I think that's a mistake. I think anyone in business should take the time to understand the dynamics of business finance. Because when you know your numbers and when you understand the relationship between operational activity and how that translates into your accounts and especially into your bank balance, then life becomes so much more interesting because then you can really think about how you operate, what your business model is, how do you become more efficient, how do you drive more profitability, all those things. If you don't have an interest in or understand finance, then you're missing a big part of what it is to be in business.
Yeah.
So I think anyone interested in buying a business, before they do that, either get someone like you by their side. We work with fractional FDs and CFOs as well because you need that degree of expertise by your side. If you're a kind of operator entrepreneur, either you're going to find the time and learn about this finance, or you get someone on your team because business is team sport.
Yeah.
You can't do it all by yourself. And you don't have to know everything, but you have to know the guy that does. And for that to integrate with what you're doing. And it's the same with marketing and sales. I'm not saying you have to be an expert in all those different areas, but you've got to know what you're good at and you've got to know how to pick good people around you if that's what you're going to do. So if you said to me, I've got a client who's a great operator, who's interested in buying a business, the first thing I'm going to say is, who's he got supporting him? Because to go it alone is just not going to work, in my
Yeah.
opinion, based on my experience. So think about your team. And I coined the phrase MSOFT ages ago. So MSOFT for me stands for, this is how I think of a business. I think, first of all, a business is like a box. Inside the box, there's 5 compartments. Marketing, that's who you are as a brand and how you generate warm leads. This is attraction marketing. The world knows that you exist. Your target audience go, I like what Samuel does at his practice. I want to talk to him. That's the function of marketing. Sales is the next piece of the pie. So once you're getting warm leads, what is your process to absorb the leads, turn them into a customer says, oh, right, I'm going to buy from you? And that's pricing, it's terms and conditions, it's negotiation, etc. Then the O is operations. How do you operationally deliver the product or service that you promise in your marketing? So that you've got a happy customer delivering a great outcome based on the promise that the marketing gave them. So that's, organizational structure, leadership, understanding how you deliver something efficiently and effectively, also how you stay ahead of technology. Right now I'm investing a huge amount of time in understanding AI and AI tools, for example, because we have to.
Yeah.
How do you overlay that into your operations? And then F is finance. So when you've done all of that hard work and you've delivered a great product, how do you make sure you get paid, that the money's in the bank and you're managing cash flow? Because if you don't understand cash flow, you don't understand business.
Yeah.
So what cash flow tools do you have? How do you stay on top of your numbers daily, weekly, monthly, quarterly, annually? All of that is really important. Now, there isn't one person that can do all of those things, but if you're the leader of your business, you need to have a team that can maintain that whole process, and T stands for team. So, team is everything. So I think for me that those are the learnings that I've had over the years. So I started by bringing my marketing and sales expertise, but I've had to learn all of those other functions, and actually been lucky in a way, whilst not every deal that I bought, ended up as a 7-figure exit, it taught me so much. So, and that's what I share with my clients today is sort of, okay, when I look at a business, every business that I consider either for a client, either buying or selling, or for myself, will always be that overlay of MSoft. What have I got? What have I got in terms of marketing, sales, operations, finance, and what kind of team is there? How good is the team? What's the background? Where's the knowledge gap? Where are there opportunities in that business to make it better? That might be marketing and sales, but there's no point bringing in lots and lots of new leads if operationally you can't deliver them.
Yeah.
If by supercharging the business with tons of new sales, you're going to kill it. You might overtrade. How are you going to finance it? If you suddenly increase your sales, what does that do to your cash? Are you going to run out of money? What happens if you get a bad debt? All of those things. There's never, it's like an engine in a car, isn't it? It's not one thing that drives the car. It's all the pieces. So I think understanding that and being able to analyze the target company, if you're thinking about buying with those elements, that's the lens, if you like. But if you're selling your business, what are you presenting to the buyer? How well organized is your business? Where are those weak spots? And it might be that you're not particularly good at sales and marketing, but if you're doing okay because you've got a great stable customer base and making good profits, then what you're presenting to someone like me is what I would call low-hanging fruit. So now you can say to me with justification, look, my business works great. It generates 500,000 profit every year. But if we then added in sales and marketing, here's how you, Mr. Buyer, can make a ton more money. That then goes some way to justify the price that you want for the business. So it's just as important, if you own the business and you're thinking of selling, to understand all of that, because that's going to help you to get a better value deal with the right buyer, as it is for you as a buyer thinking about, what am I stepping into?
That is absolutely amazing. When you go into a business, what are the first 5 things you do?
When I go into a business,
Yes. I know you've given us a template, so I get the idea that this is a template that you almost work with every time you go into a new business. MSoft, you look at sales, marketing, operations, team, finance. Is there anything else that immediately you want to attack as soon as you go into a new business after you've acquired it?
there's two things really. The first one is finance, making sure that the cash flow is flowing the way that you planned it. I often use the phrase, nobody ever produced a spreadsheet, it didn't look good. So in your nice financial modeling that says, I'm going to buy this business and here's what the numbers are going to look like, the reality between a spreadsheet and the actual bank balance can be somewhat disparate. So all over cash flow.
Yeah,
Cash is king.
yeah,
Understanding the rhythm of the cash flow, the sales cycles, the terms and conditions, what's your debt turn?
Yeah.
Being that's the most important practical thing, making sure that everyone's paid on time as per their expectations. So things like wages, suppliers. So there's no business interruption at all. But the other bit is the more sort of thought process. So I never change anything in the first month, like at all, unless there's something that was already planned in or
Yeah.
was very obvious. Because in a business transition, we're all humans. We all instinctively fear change, or we're dubious about change. It's the one thing that we're like, until we've gone through a change, we're never sure what's on the other side.
Yeah.
So if you don't change anything, then there's nothing to fear. And the new boys in town, what's happening starts to fade away. But you can do some very simple, easy wins with people. You can ask the simple question, on a day-to-day basis, what would make your life better? A classic example is when I bought a business back in 2017. This happens quite a lot in businesses. Owners tend to be cost mindset. Everything costs a certain amount
Yeah.
of money, rather than an investment mindset. And so one of the guys said, it'd be nice if I had an extra screen, because he was an estimator and he wanted to be able to look at things on two different screens. What's a screen these days? I don't know, couple £100. Everybody got a new screen, and the transformation in people's levels of happiness just by adding two screens to their daily workload was immeasurable. You don't need to do complicated or expensive or difficult things. It's just by asking the nice questions and listening to people. You're the new person in town, and sometimes people will tell you things that they wouldn't have said to the previous owner, and it's just by use the ratio of two ears and one mouth. Ask people lots of questions, find out about them. It's a function of good leadership. Ask them about their family and, you know, what do they do outside of work? Get to know your people without doing anything else demonstrates a real interest in the people and an empathy for them. That doesn't mean you have to agree with every moan and gripe that comes your way, because there'll be plenty of those. But you just have to listen and absorb, and people see you paying attention. And then that helps you start to figure out where the gaps and where the challenges might be. Because it doesn't matter whether it's Cadbury's or a 10-man business. Business is people. It's, when all the blue chip clients that I talked about that I'd sold to, I didn't sell to JD Sports. I sold to Tim, who was the marketing director. I had a relationship with the guy who took us on. When I sold to Sainsbury's, I didn't sell to Sainsbury's. I sold to a guy called Jerry, who was my client. We should never lose sight of the human interaction that underpins everything in business. As an accountancy firm, you will be the trusted advisor to many of your clients, but they'll think of you, Samuel. They won't think of the firm.
Yeah.
The firm's just a name over the door, but it's the individuals in the business, you and your team, that the clients think about when they want that interaction. And that, for me, is fundamental to any aspect of business. We work with each other on a human level. And it's no different going into a business that you've acquired. It's a hearts and minds campaign as much as anything else. Some people will find a way to leave because it's not for them. My style of management, my style of leadership may be not for everybody. But it's a nicer way for people to realize, okay, things are changing. I'm not being sacked, but this isn't what I want to do. And that could be for a whole host of reasons. I've never yet bought a business with any intention of getting rid of anybody. And I could never imagine buying a business, the old pretty woman, buy it and asset strip it and all that sort of stuff. It's a complete anathema to me, because you're buying the business because of what it is. So why would you want to get rid of anybody?
Yeah.
If you like what you see and the business is working well and making money, that's the people in the business. So yeah, that never enters my head, really.
Fantastic. Do you want to tell me your journey, let's say a 3-month, 4-month period, how you find a business, where you find a business? The first day you walk in, do you address all the staff and say, listen, we're not trying to take any jobs to keep morale high? Just paint a picture a little bit of how that journey begins. When you find a business, brokers, you get into the business, you broker the deal. The first day, so for example, you mentioned Scotland, your first month, your first day, first couple of days, do you actually go to the location irrespective of where it is in a country? You make sure you spend time, you observe, and so on and so forth. So over to you. I would love to hear that.
Yeah, I mean, we teach a 90-day transition process, but before that kicks in, long before that kicks in, one of the challenges in selling an owner managed business is, and I'm, you know, this is where I'm very sympathetic to sellers. If you're owning and running a business with let's say 10 people, 20 people, 30, even 50 people, the concern you'd rightly have is if you then sat your team down and said, right, I've decided I'm going to sell. What that can do is set the hairs running in so many different directions. People can immediately, back to my point about the fear of change, can immediately think, oh, right, someone's going to come in, my job will be under pressure, I might get the boot, all those sorts of things. People start dusting off their CVs. So it's entirely appropriate for owners to be very cautious about confidentiality, don't want to tell the team, don't want to rock the boat, etc. The challenge on the flip side of that is, as an incoming buyer, it's almost like a rabbit out of a hat on the day that the business is announced for sale. It's a fait accompli. And at one extreme, you could have a disgruntled management team thinking, well, why didn't we get to buy it? And then you risk losing them. And that's particularly difficult in a service business where the business is the people.
Yeah.
At the other end of the extreme, you can get people going, well, I don't know, Guy, so I'm not going to work for him like I did for Fred. There's so many different human responses to that reality. So I've done deals where we've discussed this with the seller and said, we're not even going to tell them that we bought it. We're just going to announce me as a consultant. I've come in and I've come in to help John to navigate the changes and with a view to growing the business. And then only after sort of 3, 4, 6 months, does it become apparent that we're now the owners, by which time all the fear has kind of disappeared because it's either working or it isn't. Yeah. So likewise, we never do a trade announcement. We never tell suppliers that we bought the business because of that experience I had when all the suppliers went, all right, thanks very much, we'll change all the T's and C's. It's like, oh my God. So I'm always very cautious about that. But 6 months in, when all their bills have been paid on time and there's no disruption, it's fine. So I tend to play the transition as low key as possible for all those reasons, because it's hard for sellers to prep their staff and it can be a nerve-wracking time for those people when they hear the story, really. And people react in lots of different ways. Some people get excited, some people get nervous, some people just carry on. And there's a full spectrum of responses, really. But in terms of the 90-day process, as I said, that first month is all about cash and just getting to know the people. The second month is then saying, okay, where we've identified gaps in MSoft, we start to think about how we'd apply that. And quite commonly would be marketing, lead generation. How do we grow the sales base? If we need to identify how we could grow the business, hopefully we've done that in due diligence with the sellers and identified, okay, we bring in 100 extra leads, how are we going to fulfill them? No, that's okay, there's capacity. One thing I forgot to mention is I always ask, what's the capacity of the business at the point of sale? Because there's no point me buying a business that's maxed out, because then I've got no headroom. An example of that, I bought an engineering business in 2021. An engineering business is fixed assets. It's a factory. So you've got the square footage of the factory, you've got the machinery on the factory floor and people. Raw materials come in one door, finished goods go out the other. So you have to say, what's the capacity of this estate, the buildings, the facilities, for us to expand? And we figured out that we could take the business from about 4 million revenue to probably 7, maybe a bit more within that estate. So that's what I mean by analyzing where the capacity is. Yes, we probably need more people, but we wouldn't need to move. We could get 3/4 of the way through the growth curve without substantial change in capex and so on. So those are sort of typical questions, really. And any business, as a buyer, you've got to think, what's my capacity? Now, if you're a seller, why would there be capacity in a business?
Yeah.
Why would any of your clients, Samuel, not be working maxed out? Well, you and I would probably agree, because if you've got a good business, is delivering the lifestyle that you want as a business owner.
Yeah.
Because if you make more money, you've got to pay more tax. Hands up who likes paying tax. If the business is steady away and it's doing okay, growth brings challenges of its own, doesn't it?
Yeah.
How do I know if I hire somebody that they're going to be any good? And we've all hired people that turned out to be duff, and then you've got all the problems of getting rid of them. And the new employment laws just make that even harder.
Yeah.
So there are natural reasons why businesses don't go to their full capacity quite often. That they're just fine. They're lifestyle companies. They've delivered the outcome that the seller wants. And then one day they go, right, I want to sell now. So a smart seller identifies where that capacity could be for a buyer. It's like presenting a
Yeah.
nicely prepared dish, doesn't it? It's sort of here's how the dish could be bigger, but here's the portion you've got at the moment. And so those are the factors that I think about from either side of the perspective, whether I'm thinking about buying or I'm helping a client to buy or helping a seller to position the business,
Yeah.
as it is and what it could be for the seller.
That is amazing. Do you have a hard stop?
I'm okay. I'm all
Yeah.
right for another few minutes if you
Fantastic.
wanted to
I,
carry
I,
on.
I don't even know where to start. I've got so much questions. Okay. So you mentioned about buying business. By the way, we spoke about how do you find your deals without giving too much of your course content away. How would you go about finding your deals?
No, that's fine. Happy to share. So it's very simple, really. I call it direct or indirect. So for me, the direct approach is through the broker network. Now, let's just tackle that for a moment. There's all sorts of stats that fly around about brokers. The fundamental thing about going to the broker network is this, that you know that the seller has made a conscious decision and probably parted with quite a lot of cash to the broker to put their business on the market.
Yeah.
That's the single most important distinction. And to some degree, will have prepared for that. In other words, they'll have the last 3-4 years accounts available. They'll hopefully got some management accounts. Someone's created an information memorandum. There's information that's been generated about that business. The degree to the depth of it varies a lot, but essentially someone has gone, okay, I'm going to have a go at selling my business. So you're stepping into conversations where that decision is made. The indirect route is when you gather data, write to companies, contact them, reach out, whether it's on LinkedIn, it doesn't matter. There's lots of different ways you can reach, like any kind of direct marketing. You can reach out to potential sellers. The challenge there is that you don't know whether they've made that decision to sell their business. So it's an awful lot of bread on the water, effectively, to get a bite. So, for example, let's say we used to say in direct marketing that the buyer, to get a transaction, someone needed to be ready, willing, and able all at once. But you could send a direct marketing communication to somebody, i.e., would you like to sell your company? And they might be willing and able, but not quite ready.
Yeah.
And unless you've got those three components, you're not going to get a bite. But you will get people who will put a letter in the desk drawer and forget about it. And then when they have a really crap day, go, where's that letter from Guy? Pull it out and get in contact. So like any direct marketing, they often talk about 7 touch points before people will buy. So as a buyer, I teach people a lot about think about your positioning because you are who Google say you are. So
Yeah.
if you're going to do this, do it properly, do it professionally, have some presence that people can look you up, see who you are. You've got some sort of social media presence, perhaps on LinkedIn. It's the obvious one where you talk about your interests. I'm looking to buy X. And people go, okay, there's a consistent story. You're not some chancer who's been on a course and thought, I could make a ton of money. How easy would that be? I hear people saying, buy a company, put a general manager in, put your feet up. That's complete hogwash. It's just like life isn't like
Yeah.
that. So if you going into it from that angle, it's the wrong approach. But if you are serious about your personal wealth and growth and you're interested in business, then do it properly and you give yourself a better chance of success, by tackling it in the correct order, really. So it's like any sales process, any lead generation process, you shouldn't tackle it any differently than you would your existing business. There's rooks of books and guidance and so on how to do that. So we teach a lot of techniques, and AI is becoming more and more prevalent in some of that as well. So we talk about that, but it's basically, think of it in those two terms: direct, the broker network, for good or for bad, they're on the market. Indirect, It's about targeting the type of business, the age profile. We always talk about, we've got 10 years demographic shift, Samuel. So people need to sell their business, whether that's through age, they've had enough, God willing that they're not ill, but some people do get ill. There's a range of reasons. Even divorce,
Yeah,
can be stimulants for people to exit their business. But overall, the best people to have the conversation with are those that need to exit through retirement. They put 30, 40 years into their business, and their significant other is going, it's time for those, days on boat trips and walking and time with the grandkids, all the kind of life stuff really that people need to exit. And you can have quite a lot of your personal wealth tied up in your business. So why would you not want to exit that business with as much of that value that you can?
absolutely, absolutely.
But crucially, hand it on to the next best owner, because it's about transition. It's about making sure that that legacy is successful as well. So I when we're doing outreach, we target by age, type of business, things that I can talk to you about your business with some confidence. I don't know anything about tree surgery other than a big saw chops down a tree. I don't know any other nuances of tree surgery,
Yeah,
but I'm pretty good at running a business and developing sales and marketing. So it might be that you own a tree surgery business. You've got a great team of guys who want to stay in the business and they do the tree surgery, but they haven't got a clue about how to run a business. I'm interested in that because I could do the bits that they can't do and they can carry on doing the bits that they're good at. And that's the way that I tend to think about it.
many people do not go down the path of acquisitions because one of the reasons is that they don't have the money to fund it. Are you able to dispel any myths about funding, how you raise funds, and even in some cases, no money down deals? Yeah, please, if you could give some insight on that as well.
Yeah. Um, so when I started, I had the same problem that most people have, is that the cash that I generated pretty much was recycled in the company group that I had. So we had a technology business and we had an agency. And we had a little bit of property as well, but there wasn't much spare cash really. So I started to study how people like Sir Martin Sorrell built WPP, for example. He's one of my business heroes. So anyone watching this, go and read about Sir Martin Sorrell. He's one of the great undervalued titans of British industry in the last 30, 40 years. So he was the FD for Saatchi & Saatchi and set up, what he did was bought a PLC, a small PLC listed company called Wire Plastics and Products PLC, and then reverse engineered that. So raised a load of cash because it was a listed company. He could then raise cash and then go out and buy other agencies. So that's how he did it. The first agency he bought was a company called J. Walter Thompson, which at the time was one of the biggest agencies in the entire world. Now, obviously, he had a high profile, lots of contacts, etc. But the idea was there, and it was like, well, how the hell did he do that? So, how you raise money? You can raise money from investors to give you cash. Think about people that as long as you've got a solid business plan, and importantly, people back you. Remember the maxim: money follows people, or
Yeah,
money follows management. If you've got a good plan, whether you're a property investor, a business investor, and people believe in you, in your circle, they know what you're capable of, there's no reason why you couldn't raise cash from other people to go into a deal in exactly the same way as you do it for property. So that's the first point. Secondly, you don't need necessarily a lot of cash, but if you think about the different funding types, I'll just touch on those quickly. Asset-backed lending, as the name suggests, is really based around the asset that's being funded. So plant and machinery is a classic one. Funders will fund all kinds of plant and machinery all day long because there's a physical asset, like a mortgage on a property. They can see the asset, they control the asset, they lend you the cash, you pay them the money back, everyone's happy. Now, invoice finance is a form of asset-backed lending in that you've done the work, you've raised an invoice, you've just not yet been paid for it. So if you finance those invoices, that can generate cash in your business. And invoice finance can work very well provided you've got forward orders. The worst thing you can do is to draw down your cash early and then your sales drop and then you get squeezed. But if you've got a business that's consistent in its revenue and its turnover, then invoice finance is a great business tool. And so I often say to people, buy the business from the balance sheet. So That's assets that are not yet leveraged. You'll know all about this. So the tangible assets, the current assets. As long as you've got good, strong controls in terms of the current liabilities, you're on top of your tax, not behind, etc. Then those are the tools that you can use to acquire the business. And then 80-90% of businesses have deferred consideration. So there's a portion of the value of the business which is paid through subsequent payments, whether that's monthly, quarterly, annually. And it's the future profits in the business that will fund those deferred consideration payments. And that's how most businesses are bought and sold. So understanding those finance tools is a key part of understanding how to
Yeah.
structure a deal. Now, can you do it without any money? Yes, you can. One of the things that I've pioneered in particular is sometimes called seller finance or vendor finance. And in last year, we did 20 million of deals using just that. And this works where the seller is well established. So I'm talking about someone, probably in their 60s. They paid the house off, got the holiday home, put the kids to university, got a solid pension, got some assets. They're okay financially. And so they don't need necessarily a large lump of cash at the point of completion. But what they do want is to get all of their money. So when I buy a business using bank debt or investor debt, I have to give security to the lender because they're providing the cash. But if I buy the business with vendor finance, all the security in the deal goes to the seller. There's no bank involved. And we all know, and they're true stories, banks can be ferocious when it comes to the first sign of trouble. Whereas if you and I buy each other's business, let's say I buy your business and there's no bank involved, but I'm going to pay you out of the cash flow of the company. If I don't do that, you can take the company back without any issues whatsoever. And we've structured a type of security share, a deal structure, which is really belt and braces for the seller, because I don't want to not have a good outcome. Not asset stripping. I'm not trying to, cream cash out of the business. It's a genuine opportunity for me to step into your company, guide it, support it, get it to the point where you're paid off, and then I've got a great asset. But you as the seller protected in that process. So if you're selling me a good business and we get on and we work together, so like I said, we did 20 million of those kinds of deals last year, and we did some in the year before as well. And I think in these uncertain times, economies all over the place, who knows where we're going with interest rates? We might have a sovereign debt crisis. The world's very, very topsy-turvy. For parties to rely on banks as effectively their partner in transactions, for me, is very risky. If we can encourage people to work together with all the right security in place to get a great outcome, that's a safer place to be.
Fantastic. You know what? Would you say that you're an introvert and an extrovert?
By nature, I'm an introvert,
The
but
reason,
I like helping people. So that's where my extrovert bit comes, because I generally, my profile is a coach and I like to help people.
the reason why I asked that question, a lot of what you do seems to be around building relationships, networking, and speaking to people. In fact, when I did the quick fire questions with you at the beginning, thinking about, I asked 10 questions, and I think about 4 of those 10 questions, your response was team, people, team,
Mhm.
people. As an introvert, well, you kind of answered it. I was going to say, how do you now go about navigating that landscape of networking and speaking to people? And I think you touched on it by just having the willingness to help people, but you can expand on that a little bit.
I think I find people fascinating. I like sitting at a bar and watching the world go by. People watching, if you like. It's a fun pastime. I find people of all different ages and backgrounds and experiences, interesting. I suppose this is my second year of continuous service in the British military, and that's exposed me to people at every spectrum of society, from meeting the king and the queen before him to the lowliest soldier, if you like. And I guess you have to figure out how to talk to people at all different levels and understand and communicate. That doesn't mean to say that there are not difficult people out there or other people that don't like me. I'm not saying I'm everything to everybody, but I have that interest in people. And the older I get, the more I realize that everything in life is about understanding how people tick. And if you can, you don't have to like them, but if you can get them, you can get them to perform in a way that's good for them and good for the business, really. So I suppose that's my driver, is understand people. If I can help people to get the best out of their lives, then I feel like I've done a good thing.
Fantastic. I'm so happy with having the opportunity to ask you these questions. I know you're fixed for time. I don't want to take up too much of your time. Honestly, Guy, we could have done this podcast for 3 hours. It could have gone on and on and on. I certainly want to appreciate you for the time that you've taken out. One question, actually. When taking over business, have you ever experienced somebody trying to cook the books?
Sure.
Because obviously, when they're trying to sell it, they want to give you the best. And how did you identify it? How did you overcome it? What did you do in that situation?
Well, one way and this is a tip for the audience, whether you're buying or selling, one way to avoid the specifics of numbers is to work with formulas. So if, for example, you said, right, we're going to value the business on 4 times adjusted EBITDA, then the EBITDA number becomes empirical. You as an accountant, it either is or it isn't.
Yeah,
Accountants are great at drilling down into the accurate number and the reasons why it is. So if you use a formula rather than a number, it's a great way to level the playing field. And then in most contracts, there are things called warranties and indemnities. So if the seller has warranted that the numbers are what they are, and subsequently you find a problem, then you just take it back to the formula. And you go, well, it didn't turn out to be 500,000. It turned out to be 250, but that's the number. And so you
yeah,
can adjust the price accordingly. And it gets away from the conflict, gets away from, drafting lawyers in. So the more you can use formulas to nail things down, the number follows the formula.
fantastic. And any last messages for our audience? Where can they find you? And we're going to be posting something on you actually on our newsletter, so that if there's anybody that wants to reach out to you when it comes to I've read so many. I met somebody who sold his business for 100 million. Getting some advice from me, he said the two advice is that productize what you have, so find a way that you can digitalize it, that anybody can buy it anywhere. You bottleneck a service-based business. And then he spoke about acquisition. He said acquisition, acquisition, acquisition. If you can, whether you're buying a company to expand what you're already doing,
Yeah.
but you kept talking about acquisition, acquisition. So please, your final message to the audience and where they can find you as well.
Sure. Well, I'm on LinkedIn and on Instagram, and I have a Facebook following. So by all means, connect with me. I'm personally in LinkedIn. I don't have a bot or somebody else doing it. So if you message me on LinkedIn, it will be me replying. Or go to our website, which is all the W's, and it's just thebusinessbuyersclub.co.uk. So we have a vibrant community of people that meet regularly. We've got a live meeting next week. Up and down the country between Manchester and London, and all the stuff that we help people with is available on there. And I host a live club call every Tuesday at 5 p.m. so you can connect with me that way as well. So yeah, get in touch via the website or drop me a message on LinkedIn.
Fantastic. Really, really appreciate that, Guy. And for the rest of us, that's a wrap for this episode of Finance for Founders. Huge thanks to Guy Bartlett for sharing his incredible insights on buying, building, and exiting businesses the smart way. Now, if you're a founder thinking about your next move, whether it's scaling through acquisitions or planning your exit, please rewind this one, take notes, and connect with Guy to go deeper. You mentioned some of the clubs that he has every Tuesdays as well. Please be sure to rewind this back and take the details again in the description of our YouTube podcast. We'll put his details there as well, his websites and his YouTube LinkedIn link as well. And you can learn more about his work at the Business Buyers Club, or follow him on LinkedIn. All these links will be in the notes, as I mentioned before. If you enjoyed this episode, don't forget to subscribe, leave a review, and share with a founder who needs to hear this. Until next time, keep building, keep learning, and keep your finance founder friendly business going. Guys, it was a pleasure. See you all next week. Take care.
Take care.